how vulnerable are bonds actually if we don't see a pivot from the Fed to what the RBA did?
You know, I think we are starting to hear scatterings of slightly more dovish rhetoric from the Fed, acknowledging that they have to see a little bit of an impact of all the hikes that they've already done, that there is liquidity concerns globally, volatility, of course, that rose a lot. I don't think we're going to get any kind of pivot. Do we get closer to a shift downwards in the rate hikes and maybe closer to a pause at this higher for longer? I think that is becoming a bit more likely, but we're going to need to see a lot more data showing that we're having some cracks in the labor market, some cracks in the housing market before you really have a Fed that can acknowledge that it might pause. They really don't want to take their foot off the pedal and risk inflation expectations coming back higher.
Esty, where do you stand on this debate then? The rally that we saw yesterday, Deutsche Bank saying they're fairly bullish. This could be setting up for a significant rally towards the end of the year. Bank of America, though, saying that positions have not yet been fully washed out. Where do you stand on this debate?
I'd have to be closer to the first version. It feels like we've been a lot closer to capitulation. It does feel that disinflation and, again, some of these cracks in the growth picture are starting to appear. Disinflation more and more widespread across a lot of data points. And over the next couple of months, we've already priced in a pretty negative or disappointing earnings season. We know we're going to get a few more of those announcements, but so much of that has started to be priced in September. I do think that we should have a nice bounce into the end of the year.
Christine, what do you think will continue supporting some of these equities that we're seeing in Europe?
Well, Francine, I think I agree with Esty. I think there's a lot of sentiment now trying to find the bargains, and there's a lot of that here in Europe, of course, being the land of value. It is quite interesting, though, because we are seeing, again, this debate, right, whether equities have bottomed at this point or whether it requires more capitulation in the markets. I think Esty is correct to highlight the earnings seasons that are upcoming, because that would be crucial to kind of gauging where sentiment really is. One of the things, of course, that we've been watching for is really that downgrade in future earnings expectations, because we have seen kind of the frontline sentiment in equities really getting downgraded, but not necessarily being followed by that downgrade in future earnings expectations. So I think that would be interesting. If we see that in upcoming earnings seasons for the rest of the year, that could be quite an important signal for where the market is about to bottom.
And Esty, we've seen concerns flagged from the likes of Nike and others around inventory build-up, the likes of Meta cutting headcount for the first time since that company was formed. When you look ahead to the earnings season, do you expect to see downgrades, or will these earnings hold up?
I think we're going to see a mix. We're certainly going to get downgrades. And in a way, that bad news is something of good news for the Fed, because it is showing that things are cooling. At the same time, depending on if it's too consumer-led or not, we're going to have to see a bit of the market reaction. As you said, Nike definitely worried investors. On the other hand, I think especially in the tech sector, some of the earnings are going to hold up, as they have quarter and quarter throughout the pandemic and since, especially across some of the big tech. And I think that's going to help move the market higher later in the year, because those earnings will probably be more robust than what people expect. We've heard some of the cost cutting already from some of these big names. So some of that has been sort of preempted already in the price. But I think in the earnings, they do tend to surprise on the upside.
Christine, when you look at some of the big names overall, we don't tend to talk about China as much as we used to in the past. Is there something, when you look at OPEC, and this is maybe a warning sign, a warning shot across the bow, that we don't 100% understand why they want to cut by 1 million barrels of oil a day unless they see something very ugly? Could that very ugly be coming from the east?
Potentially, Francine, especially because, all throughout the year, China, in the state of demand in the world's second biggest economy, really has been quite the wild card for a lot of markets this year. And so it is quite ominous that the OPEC Plus group is seeing this need to cut production, potentially pushing the price of oil ever higher again in an inflationary environment. I mean, there's not a lot of visibility at the moment in terms of where the China story is going to go. We know, of course, that there's a lot of interest from authorities there to still support the economy. They haven't quite bounced back fully from the post-pandemic era, since they're still kind of grappling with the aftermath of all of these constant lockdowns. And so it is, I think, I would expect China to continue just being a bit of a wild card here for a lot of expectations in the macro land, and potentially something that could be a bit of a downside threat heading into the fourth quarter.
Esty, on the UK, we had the U-turn, of course, yesterday from the Chancellor. Then we hear and we have reporting that, in fact, they're going to bring forward their spending plans, that maybe you'll get the OBR with their analysis and their checks as well. Does that reassure you?
You know, it's been something of a mess, and it did break a little bit of the confidence in the markets. The U-turn was seen as a positive, but of course, the fact that there needed to be a U-turn wasn't great. So I think you still have to be a little bit cautious on the UK. A lot of uncertainty. We don't really know where we're going to end up with this mini budget and with the news. If the OBR numbers show and that spending is being reined in, that would definitely be a big boost. And maybe now that they've scrapped that higher tax earners tax cut, that could help as well. But I think the confidence side, especially on sterling, is going to take a lot more time to recover.
So does that mean you're expecting the government to do more U-turns to help sterling, or is it just a loss of credibility that will take time to rebuild?
I think it's probably more in terms of credibility is a strong word, but at least confidence and some worry about the future path of the UK. So it will take time for sterling to recover. We've had a bit of, well, Liz Truss has had a little bit of an issue with this view that she's a chameleon and that she changes her mind a lot. So one U-turn already less than a month into the premiership isn't fantastic. I think she's going to do everything she can to avoid more U-turns and this perspective, this view that really she just flip-flops. So at this point, not expecting a lot more U-turns, no.